From the 2018 Symposium on Natural Resources, I'm Albert Liu, sitting down today with Gaffney, President, TIAA Bank World Markets.
Yes.
Got it out. How you doing?
Great, thanks.
Thanks for joining me. Well, it's been EverBank for so long,
right,
that it's almost hardwired, so it's going to adjust that. But great to see you again. It's been about a year since we last talked. Really enjoyed your presentation today. Yesterday. Can you go over a little bit what you talked about, the macro story, basically?
Sure. We're under the opinion that the economy is still chugging along, if you will. We're seeing it continue to grow. There are some questions on the horizon. Some of the markets seem to be elevated by central bank intervention, and the question is, as these central banks start to pull money back away from the markets, what's going to happen to those markets? So, but for now, I mean, interest rates are very accommodative. I think that global growth continues to move forward. We are starting to see signs of inflation, which is actually a good thing. Remember, last year, or maybe the year before, there were a lot of people worried about deflation, and now we're starting to see inflation creep back in. The equity markets, especially in the U.S., the bull market is aging, and in fact, we think it's in somewhat of the final stages of that bull market. But the question is how long that bull market can continue to run. One other thing I pointed out during my presentation is the 2-10 interest rate differential, and how flat the curve is getting in the U.S. When that curve inverts, it's typically a signal that it's a precursor to recession. It's one of the signals that shows that the economy can be heading into a recession. We're not inverted yet, but we've been approaching it. And the chart I showed that, in fact, we will probably invert, sometime soon if it continues along its current trend. And that, again, isn't a signal that we're immediately going to slip into recession, but it certainly is a signal that within the next, over the past 5 recessions, the curve has inverted on an average 17 months before the recession officially begins. So it is a warning signal. So I guess, from a macro standpoint, U.S. continues to grow, global economy continues to grow, but there's a lot of warning signs out there that perhaps we're running in for a rough patch.
Yeah, a bit of an ominous slide you put up. Yes. There was the St. Louis Fed chart with the shaded areas with the recessions. Rick was on a panel with me about cryptocurrencies. Sure. And he said, you got all these cryptocurrency gains, hypothetically, where would you put them? He said, I like cash. Yeah. And when you talk about the 2-10 spread narrowing to the extent it is, yes, one thing is the fact that it may be a forward indicator of recession. But the other thing is just the fact that short-term yields are a lot higher, and it makes a lot more sense now. Personally, I've been looking at it with my clients, looking around that 2 to 5 area, because it's actually worth it. You actually get paid now. It's not the return-free risk that Rick likes to joke about. Yeah. There's actually a decent return. So you seeing that? You seeing more interest in CDs? Are you seeing?
Oh, definitely. In cash accounts, and certainly on the banking side, we just saw the banks all report earnings, and their banking earnings are doing real well now in the U.S. simply because of that. There's finally a little bit of interest being offered, and banks can book a little bit of a spread now. Whereas in the negative and zero interest rate environment, it was hard to make any money. But for investors, yes, it's a positive. Especially those investors that have a proper portfolio diversification, and some of that portfolio is going to be in fixed income and in cash, and you weren't being paid. And now with that interest rate starting to rise on the short end, you are starting to get paid more on your cash holdings. And it is a good safe haven. We certainly haven't seen investors move to traditional safe haven of gold or precious metals. They are really moving right now into treasuries and the short end of that treasury curve.
Mm-hmm. That's a nice place to be. Yeah. But on the other hand, the US dollar is very strong. Maybe it's overvalued. That means other things are undervalued. When you look at foreign currencies, for example, where do you see the value?
I like the commodity currencies. My outlook is that the global growth will continue. That we could get a little bumpy patch in here, but in my opinion, the commodity currencies, those countries that are making something that the rest of the world needs. Norway has been a long-term favorite of ours. Their economic fundamentals are just rock solid. I think Australia is a good place to look at right now, and again, a commodity-based currency, an economy that's doing well, and I think will continue to grow. Canada even, we're sitting here in Vancouver, and the Canadian dollar is trading at 75, 76 cents. The Royal Bank just raised interest rates. Bank of Canada raised interest rates. We're going to see maybe them start to continue to raise interest rates. So, and then the Euro wannabes, not core Europe. I think Brexit and the EU will have problems in core Europe. But I think some of the peripheral European countries, Poland, Hungary, even Czech, there's a little more risk in those countries, but I think that there's good value in those currencies.
Okay. During your presentation, I was actually pulled out because of my administrative responsibilities.
Sure.
So I was actually standing behind your presentation, behind the wall,
Oh, okay.
and I saw the mirror image of what you were presenting. There was something that looked like a periodic table.
Yes.
What was that chart?
Okay,
I've been curious ever since.
Yeah, it's we call it our quilt chart, and what that shows is it will take all the different asset classes, and they're all pictured in different colors, and it shows over time that asset class returns. It ranks them from highest to lowest, and by year. And what that shows, it's a way for us to illustrate the power of diversification, because there's not one color that's across the top or the bottom. So, for example, real estate has been, in the past 5 years, REITs, real estate investment trusts, have done very well because of the low interest rate environment that we were in. But just last year, they were one of the worst performers. The same thing with commodities. Commodities were down at the bottom of the chart for about 3 or 4 years. Now it's popped back up. Commodities started to turn the corner and had a good quarter in the fourth quarter of last year. This year, they're starting to head lower again, mainly because of the oil, the sell-off in oil and gold. But again, the chart is there to illustrate the power of diversification, that you need to have exposure to several different asset classes in your portfolio.
Finally, before we wrap up, Chris, you have a product that you talk about, the Market Safe.
Yeah.
I forget the exact name of it, but you put currencies together, offer them in a product where downside risk is limited, right? Can you just explain that for us?
Sure.
Follow up.
Our latest one, we're really excited. We're announcing it at the Sprott convention, so we just started it. It's the Strategic Metals Market Safe CDs. So in the past, we've had them tied to currencies, tied to real estate, tied to stock indexes. This one's going to be tied to metals. So the return's going to be based on the return of gold, silver, copper, and aluminum. 4 very important metals, and certainly we've been reading a lot about aluminum lately. Copper is really an indication of global growth and will move with GDP, and then the traditional precious metals of gold and silver. It's a 4-year CD, no downside risk, so your principal is absolutely protected, and there's no cap on the upside. So at the end of the 4 years, we're gonna average the growth of those 4 different metals, and you're going to return on the CD is going to be tied exactly to whatever those metals do. If they're up 20% over the 4 years, we're going to pay you 20% interest on that CD. If they're down, you're going to get your original principal back. So it's a risk-free way to gain an exposure to gold, silver, copper, and aluminum.
And the whole time you were talking about that on stage, I was thinking, cryptocurrency market safe CD. I could sell to a whole different type of customer.
Yeah, the problem is, and believe me, we've looked. Yes, and right now we the bank doesn't take the opposite side of that trade, so we're not betting against the clients who invest into those. We hedge our exposure, of course, so we hedge it through option contracts. And right now, the crypto market is not mature enough to have those options. Yes, and if and when, I'm sure we'll take a look at it.
All right, Chris Gaffney of TIAA World Bank,
TIAA Bank
World
World
Markets.
Markets.
Thanks for
It's a mouthful, I
Thanks
know.
for joining me. I'll get it next time. Appreciate it.
Thank you.
Thank you.